Welcome back. Straight off, let's go to Mitesh now for some trading ideas.
I'll begin with a buy call on Tata Elxsi. It was a call on Friday as well, very strong breakout, breaking into new swing highs. Now can be bought with a stop below 430 for targets of around 475, 480 on the upside. Sell call on Bajaj Auto with a stop at 1875 for targets of around 1770. Bata India is a buy, and I would suggest buying with a stop loss below 1000 for targets of 1075. CNX IT is a buy with a stop below 9800 for short term targets of 10,000. And I've got a sell on Federal Bank if it breaks below 74. Sell then with a stop at 76 for targets of around 69.
Let's also bring on board Megha Chadha from our research team to find out what our brokerages expecting today from the vote on account. Megha?
Thanks for that, Aisha. I'll start off with the Deutsche Bank, where they're expecting more consolidation to be announced in the budget. They're expecting that the government may target a fiscal deficit target of 4.2% for FY15, and for the current year, that's FY14, the current account deficit may be forecast at about 2.3%. Standard Chartered, well, they are expecting that the government will meet its fiscal deficit target of 4.8% this time around, and for the next year, then the government's likely to project a target of 4.2%, and the government may also reduce its expenditure by close to about 0.5% of the GDP, while the government borrowing is likely to be around the 6 trillion rupee mark. For Kotak then, well, they are expecting that for the next year, the fiscal deficit target could be set closer to 4.4%. The borrowing, however, could remain high, upwards of close to 7 trillion rupees, but they do not expect any sharp uptrend in terms of cross taxes.
Right, Megha. Thanks a lot for that. Ramesh, this question is coming your way. Do you think the finance minister needs to be applauded for keeping the fiscal balance under check, or for controlling the CAD? Where do you think he would get greater votes?
I think the CAD was the cause of this huge volatility we had last year. So I would say the CAD in the short term was very important. The good job he did in terms of allowing the swap windows, cutting gold imports, the whole slew of measures he took. And we go and look at Venezuela, go look at Brazil, go look at Russia. I mean, South Africa, Turkey. I mean, these guys are still swimming with amazing amounts of problems. So India seems to have broken out of that pack of problems that emerging markets are. And I think because of the decisions that Mr. Chidambaram has done, we can look for, Nikunj, historically, the period between which the elections have been declared and the election results have been generally a very positive period for Indian markets. So expect that to continue. And I think the market will start focusing on the new government and the new policies that are coming on. So it almost looks to me like a clear runway ahead for all of us.
You're sounding optimistic, but aren't you worried about what is happening to interest rates, inflation, a broken down investment cycle, instability in emerging markets, and slowdown or a visible slowdown in earnings?
They're all headed in the right direction. I think inflation is headed in the right direction. I think food inflation is coming down dramatically. Fiscal deficit as a percent of GDP, current account deficit are heading in the right way. They're bottomed out. Interest rate cycle may not have, are close to the peak, at least, let me put it that way. What the new government needs to do is, of course, repair the investment confidence in India, which is brutally shaken after Vodafone, Nokia, IBM, brutally shaken. That needs to be restored. We need again a big push in infrastructure, which I think is almost automatic. Any new government will almost certainly focus on those issues. So, I'm tending to look at the glass as half full rather than half empty, because I think the worst of the price damage is now behind us, and we have to look ahead in terms of, what the shape of the economy will look like in the next 3 to 5 years, and place our bets accordingly. I think elections come and go in India, and it's not something to be overly worried about.
So Ramesh, what's the sense that you're getting? You track global markets also with equal interest. We seem to be getting now some clarity on which way the US debt ceiling problem is headed. What, according to you, is keeping the Indian markets, stuck between that range and 60-100 as such a tough ceiling, lackluster moves? Is it that money is now moving to the developed world? Is it the emerging market currency route that we're witnessing? Or, people are not willing to take bets on India ahead of the elections?
Aisha, if the Chinese New Year just passed a few weeks ago, 2 weeks ago, and they have a saying in China that on occasions heaven and earth change places. I think 2013 was a good example of that, when emerging markets became passé and developed markets became the favored genre. So 2014, the question is, will it still remain the same? Will still the focus be on emerged markets and not in emerging markets? I think that brush that has been used to paint as emerging markets as poor growth, risky, currency, and developed markets growing better will probably change. Yeah, Great Britain and the US are talking about developing economies at 4% GDP growth, which is phenomenal. After so many years, they're growing back at 3.5 to 4%. So money will attract to the Dow too, because the Dow is, the benchmark index, and it's 10 points. The S&P is 10 points away from its all-time high. So it will continue to do well, in my opinion. But I think emerging markets will now be brushed with a different paint stroke. I think the problem cases of Latin America, for example, will be relegated. Of the Middle East, of say Ukraine, will be relegated. But countries that have done well, have put sound economic policies in place, Philippines, Mexico, India, I think will attract their fair share of dollars, because Janet Yellen has said while she will continue the tapering, interest rates will remain low for long periods of time. So I think equities as an investment class will remain attractive. It doesn't negate the hard work that the new government has to come to instill confidence of investors in the market. But, I'm hopeful that, any new government will tend to do that. And a lot of the hard work has been done over the last 3 to 6 months by Mr. Chidambaram in terms of stabilizing the rupee, stabilizing the current account deficit. So, markets tend to reward the delta, and I think the delta is going in our favor.
Arvind, like they say on Wall Street, always focus on where the puck will move. And if I look at the broad picture for Indian economy, surely we have an economic bottom in place. Inflation has topped out, IIP data has stopped contracting, trade deficit is under control, and earnings may be hitting a bottom.
Yeah, I agree with all of those. I think the earnings this quarter were frankly a little more disappointing than I expected, but the reality of, what you just said and what the previous speaker just said is absolutely true. At the end of the day, we can see several reasons why India is at a bottom and headed up. The reality is that's something you cannot say about some of the other leading emerging markets like Russia or China or Brazil or heaven forbid Turkey or other even more problem areas like Ukraine. So I think I wouldn't paint this as a broad brush emerging markets versus a developed market. I think it's who's delivering growth and who has got a clear direction towards easy drivers for that growth. And I think India has, with the current account deficit under control and the fiscal deficit coming down, has put itself on the right side. And if we can get business confidence back in, which obviously we are all hoping that a new government will be easily able to do, then India could really be off to the races, because it doesn't matter if GDP growth rate recovers from mid to low to high 4s to 5%. But what we're looking for is somewhat more meaningful step change. And I think that India seems to be in a position where we could be looking in a few quarters at a 6% plus run rate, and therefore earnings recovery, industrial production, business confidence, the whole virtuous cycle. So I think that India does have a reason why we're engaged. We're cautious about the short-term trading action, but if we take a 12 to 18-month view, then India is in a pretty good position.
Very quickly, I can't not ask you this question since you do track the oil and gas sector so closely. What is it that you've made of, Arvind Kejriwal taking on Reliance Industries for the gas price hike?
Unfortunately, taking on Reliance or big business, particularly Reliance, is very popular because there's an assumption, and I assume there is some historical basis for it, that big business in India, Reliance being one of the premier examples, does have some influence in government through whatever means that one employs when one is a business house in India. But the reality is, on gas prices, the comments made by Arvind Kejriwal and Aam Aadmi Party are so badly off the mark that it's kind of sad to see. Because the reality is that I can go on and on. In the US, which is the most dynamic oil and gas market in the world, there is no restriction on a company when they turn their gas off, when they turn it on, how much they produce, what their economic decisions are, when to do workover to re-accelerate gas production when gas production comes down. because that is seen in their interest to make the right economic decision. In India, of course, everything is looked through through the political prism, not through the fact that the company was making a returns decision. And frankly, India is happy to pay wellhead prices to the Australians and the Middle Eastern producers of $8–10 plus all the shipping and all the other costs, but is having such a hard time paying Indian companies $8–8.50. So it's kind of a shame, and it's part of the reason why almost nobody globally wants to invest in the Indian oil and gas sector. And unfortunately, Indian politicians would rather play political football with this than understand the economic reason why the Indian oil and gas sector does not get global investment to increase India's oil and gas production.
Arvind, really appreciate your time. I know these are VRs for you, so I'm really glad and thankful that you could accommodate this interview request. We are about 60 seconds away from the first pre-open rate. Ramesh, do you think the finance minister should seriously consider bringing gold duties down?
I think there's some suggestion that he will do that because he wants to encourage trade and business, and since the current account deficit has come under control. I'm not sure. I think it's probably best waited for the new government to come into power to decide that. I don't really have a strong view on that, so I'm not really sure what he'll do.
40 seconds to go, and the tone clearly is more bullish than bearish, not because there is any big anticipation from today's vote on account. It is largely the reason why things are looking up is because globally things are looking stable. S&P is now striking distance away from an all-time high. Last Friday, Dow also had a strong session. The key concern, which was emerging market currency stability, that concern surely has faded away. Flows which were threatening to reverse, they also have stabilized. And in the last leg of earnings season, with the exception of some large PSU banks, the tone of numbers which have come from mid-cap companies, be it a Bharat Forge or a Britannia, they have been more bullish than bearish. First pre-open rates, now these are wild rates. You could give this market at least 2 minutes, 1.5 minutes before we get the first stable rates. But for the moment, Indian markets are, the pre-open rates are looking okay. 28 points up for Nifty 50, 50 points up for the Sensex. I quickly want to check on IT and banks. Bank, because irrespective of valuations, market men are selling banks, and IT looks like the pre-open session. In the pre-open session, IT stocks are off to a good start. Infosys up 70 rupees, HCL Tech up 7, and SBI after that bloodbath on Friday is up by 42 rupees.
Autos may just be the most active participant of the lot, considering it seems like well, there could be some sops for the sector. So let's see what the auto space is currently doing. Tata Motors, of course, wherein the ADR held out by about 4%. The stock has started off marginally higher. Bajaj Auto now turning tide. I'll tell you what, we'll give these rates some time to stabilize. It's a lackluster move. We aren't quite matching up to either US equities on Friday night or, for that matter, Asian peers this morning as well. And Atul, I want to come to you with that point. You know, the market has been so lackluster, with 6,100 really being such a tough ceiling for the market to break. What's the sense that you're getting about the Nifty move? What could make us, break these shackles?
That question's for me?
Yes, Atul, for you.
Hi. Okay. I think that the market has been really holding out very well. You know, this 5970 where the 200-day DMA is, plus it's been a range for the last 3 to 4 months. And why I find it impressive is that you can see the kind of sell-offs that has happened in the emerging market space. If you look at for the last 12 months, the emerging market index is down, say, what, 10, 11%. And August was a very bad time where India really found itself at the bottom of the lot, where, as one of the most underperforming emerging markets. But post-August, you'll find that India has really held out very well. So in the last 3 to 4 months, in spite of the weakness that you are seeing in the emerging market space, in spite of the selling that you're seeing in FIIs, India has been holding out this level. So I do think that these levels are important. I think for them to hold out is going to be important in the long run, because I do think that emerging markets are in a bit of a pullback rally phase. And if that happens, I do think that India would be one of the outperformers. You know, to identify the leaders of the next pack, or to identify markets or stocks that do well, you really have to see how they behave in corrections. And this correction that has happened in emerging market space, India has been a bit of a standout performance. So for me, 5970 or 6000, whatever, plus minus, give 50 points. You have an event today. There may be volatility, but I think India has really held out very well post-August. What's more impressive is the way the currency has performed. I think that is really what is surprising me, or what is impressing me, is that how well the RBI has managed to keep it in that range. The rupee VIX is at a 5-year low in a time when there's so much carnage around the world in the space that we are. So I think that India has been really holding out very well. And I do think that as and when things stabilize in the emerging market space, India will be one of the first markets to have a leg up. And at the end of the day, we are not very far from lifetime highs. Barring index, actually index has not been a great measure of performance for the last year. If you look at sectors and stocks, you find that there has been a lot of movement and a lot of money made. So if you really bet on the right sectors or the right stocks, I think it's been a great bull market for you in the last 3 to 6 months, whether it's in IT or a pharma, old beaten themes, but still doing very well. And in case you are in, let's say, real estate or infra or whatever, PSU banks, you still got punished. So I think the theme is going to be more stock specific, less on the index, less money to be made on the index, but more in stocks and sectors. And the strong are going to get stronger. Less money. Atul Surya, I think you've been charitable. I guess given the market volatility or the Nifty volatility, nobody is making money by trading just the Nifty. Sanjay Dutt, Director Quantum Securities, also joins us. Sanjay, I'll come to you in a moment, but Ramesh, I need to get closing comments from you. Let's talk about the space where you fish, the mid and the small cap space. Are you delighted what is happening to the mid and the small cap space? If I look at the list of 52-week high, it's a very big and expanding list.
Nikunj, it has, but as Atul said, it's basically you're picking and choosing your stocks. I think the market is discriminating between the wheat and the chaff, between the cream and the milk. Good quality companies are being rewarded, low debt companies are being rewarded, focused managements are being rewarded. The high debt, unfocused managements are getting punished quite brutally out there. So this is okay. We always need to look at leadership in this market, and I think if you ask me for the 2014 theme, I think we are the tipping point of e-commerce in India. So we want to look for people that benefit from increased mobile penetration and increased e-commerce penetration. I think we build a portfolio around those themes. You'll probably do well in 2014, 2015. We're just at the cusp of a huge internet explosion in India, where more and more people will get enabled by the net. I think that presents us with some very attractive opportunities, which is also de-risked from the political risk and that we are facing, or the currency risk that we are facing. So I think that's a good place to fish, as you pointed out.
Is the best way to bet on that? Accepting InfoEdge, I don't think there are too many e-commerce companies in India.
Well, that depends on how you look. I can find at least half a dozen of those stocks are there. It's not the right time to discuss them, so I'll avoid that conversation. But there are a lot of good companies that will directly benefit from increased internet penetration in this country. So, and also, Nikun, just to finish up on a point of saying why would the market head higher? I can build a portfolio. Forget internet stocks. I can build a portfolio in India with yields of 4 to 5%, 4 to 5% tax-free yields, and public apathy continues to be abysmal. I mean, we just do not see any retail participation. So the pendulum will have to swing. I mean, that's the nature of this business. The pendulum swings. So when the pendulum swings, we'll see a re-rating of India, a re-rating of the Ps, and a re-rating of the companies. So I maintain my stand. We see the glass as half full, not half empty.
That's the briefcase, which has the document, and it's a cherry red now. Wow.
Brown, still brown. It's the customary briefcase. Many experts feel that this really could be Chidambaram's farewell speech, more like a swan song, and huge acknowledgement of what UPA 1 and UPA 2 have done, and how against a tough global backdrop they've managed to clock a growth of more than 7% plus in last 10 years. But like Swami has been pointing out, that the way to really look at UPA 2's performance is the actual experience of the moment. And unfortunately, currently in India, inflation is ultra high and growth is ultra low. So yes, I think the finance minister is headed to the parliament. No, he's going back to his office and then he goes to the parliament. 11 o'clock is when we've been told that he would stand up on the floor of the parliament to make or to start his maiden vote on account speech. And in general, this time around, market expectations from today's event are precious little. Sanjay Dutt, why do you think this time the market expectations from Chidambaram vote on account speech are very limited and restricted?
Because vote of account is never meant to be like a normal budget, so it's whether it's Chidambaram or anyone else, I don't think there's really much in it, barring a little bit of tinkering. And I think on the other side, I think there may be one or two positives, signals that may come to, kind of give a feel good to the industry, to business. But beyond that, I don't think anything is expected or anything will happen.
So Ramesh, before we let you go, I know you're in a hurry, but the key things that you'll watch out for from today's vote on account speech.
I think you just want to look that there's no new flagship populist schemes coming out there, because that would dampen the investment sentiment. I mean, we don't want that to happen. And you want to take a look at the fiscal deficit, current account deficit numbers, that they are in line. The period between announcement of elections and election results has tended to be a very productive period for Indian equities. So, we're going to focus on those cues, and I think the stars foretell that we're in a sweet spot, perhaps.
Okay, Ramesh, we'll let you go on that note. Good chatting with you as always. That's Ramesh Damani's view on what to expect and what the market wants to know from Chidambaram today. But Aditya Narayan from Citi as well is with us. Aditya, hi, morning. Expectations from the vote on account today and the take on government expenditure impacting growth in India. What's your view?
Okay, in terms of the vote of account, firstly, we expect the fiscal deficit target of about 4.8% to be met. Secondly, in terms of any dramatic or material changes in the vote of account, we don't really expect that to happen. And thirdly, in terms of whether there's an impact of the push to get the 4.8%, in some senses, I think there has been an expenditure compression, which some of the pains of that you're already seeing in the economy. So from a new pain or new delta perspective, there's very little. But the reality is there is some stress in the system because of trying to get to that 4.8%.
Sanjay, do you think the finance minister somewhere is a very lucky man today on the floor of the parliament when he would be presenting the vote on account? The macro headwinds are now supportive, inflation has topped out, IP data has stopped contracting, and he's hit a jackpot because of the spectrum auction.
Not really, Nikunj. I think things are falling in place overall. So I think irrespective of whoever be the finance minister in the next 2 to 3 years, things would start to fall in place. The emerging market route is over. The Indian currency route is more or less done with. We bottomed out in terms of growth, etc. Interest rate cycle also will start to turn because, as you said, inflation is kind of coming under control. We are lucky to have good regulators in place, both in RBI, SEBI, etc. So my sense is that, if one just looked at last year or two, one can continue to criticize this government ad nauseum. But if you start to look at what the government has done in 9 or 10 years, I think things aren't that bad. It's just that our memories typically, particularly all of us in the finance business, are extremely short because what's happened in the markets is not just got to do with India. It's been an emerging market route. We go and look at Brazil, go and look at Argentina, go and look at a lot of other countries. Look at Spain, look at things are worse off than what we are here. We've still got the consumer intact. We've still got consumer balance sheets intact. So I think we've been probably whipping the current government and the current system a bit too much. Yes, definitely they could do more. They could have been a little more proactive, no doubt.
Atul Suri, my next question will certainly bring a big smile on your face. Aurobindo Pharma and Tech Mahindra. What's going on there? Why are you bullish?
Well, it's again very difficult to talk about stocks. But Nikunj, what the theme that has really, sort of come out or emerged in the last 1 year is that we've had a flat market. I mean, for the last 12 months, maybe the index is up 3%. In spite of that, you find very divergent performances. And whenever, and not just these stocks, there are many other stocks. I mean, why not talk about an HCL Tech that's up 116, 18% for the year? It's a frontline IT stock. It's not some hidden gem that, people never knew of. Very liquid, frontline, institutional stock. So there have been many such spaces that have done very well. And I think that going ahead also, in the year ahead, even when whether it's your tapering, you talk about your emerging market space, it is going to be country specific and it is going to be stock specific. And these are going to be very well rewarded. Apart from the stocks that you mentioned, you will see that there are even the non-favorite sectors. I mean, look at a Voltas, look at maybe a Bharat Forge, look at an Arvind. I mean, these are not an IT or a pharma stock, but they have also done very well. So going ahead, I think you're going to be rewarded for stock picking. Stock pickers have been rewarded in the last 1 year, and they are going to be going ahead. Because as I see that with tapering, money is going to get scarce. And it's very logical, when the money in your wallet reduces, you're much more careful in what you buy. It's not going to be a single brush or an allocation theory. People are going to see what's going to happen with the countries, with macros. And we have an election, a very big event that's coming up. We have sectors and stocks that are doing well. So if you place your bet very well, just as it has been a very big bull market for some people last year and a bear market for others, I think going ahead also, it's going to be very country specific. And I do think that India is well poised to sort of hold out relative to the carnage that's happening in the emerging market space.
Okay, Atul, just hold on to that thought. On that optimistic note, I'm going to quickly go across to Mitesh Thakkar. Mitesh, 10 seconds, your trading ideas.
Yeah, for short term, I've got 4 calls today. The first one is a buy on financial technologies with a stop at 274 for targets of 300. Gas Authority is a buy with a stop at 352 and look for targets of around 380 over here. Hindustan Zinc is a sell with a stop at 126.5 and look for short-term targets of 115, while I've got a buy on Tata Motors for intraday or day traders, buy with a stop at 382, look for targets of 400.
Gentlemen, stay with us. Even though vote on account is the big event, the market movement today will be a function of levels, global cues, flows and liquidity. First trades any second on your screen, 6057 for the Nifty. That's uptick of about 8 points. This should pick up because SGX was telling us a completely different story. 71 points up for the Sensex. There you go. The uptick is already visible. 6062 for the Nifty spot. Bank Nifty and the IT index. The Bank Nifty is a weak index. The IT index is in a bull run. That's the Bank Nifty for you, up by about 28 points, 30 points now, and the IT index is up by about 23 points. I'll just race through the top gainers and the losers. Tata Motors, Tata Steel, State Bank of India. These are 3 stocks which are newsmakers also. Infosys off to a decent start of 14 rupees. That's Tata Motors for you, 395. It cracked down to 350, 360. Tata Steel also is at 372. And then State Bank of India, badly bruised after numbers, 1480 for State Bank of India. Whereas Titan, if import duty on gold goes down, jewelry stocks will celebrate and Titan could lead that rally, and 233 rupees for Titan. So not a bad start, but today's today's opening grades are a function of global setup and price levels. Aisha?
Take a look at Tata Motors. While that is holding up by about 1.5%, you've got Shriram Transport, Ashok Leyland, which has been riding high for the last couple of trading sessions, 1.25% move. NMDC is showing you a downtick, but don't go by that because the stock has gone ex-dividend today, so just a price adjustment. Coal India as well is lower by 1.25%. PTC and Aditya Birla Nuvo are your other losers in trade. I just quickly want to see what the CNX IT, the Bank Nifty futures are currently up to. Bank Nifty futures just marginally higher by about 0.2%. The CNX IT index up by about 0.3. Net a lackluster market. Sure enough, we are holding on to 60.50 and well above the support level of 59.70. But again, great moves coming.
And that's largely a function of IT. And Sanjay, even though IT is a crowded trade, it is a popular trade, it is a consensus trade. Guess what, Sanjay? That consensus trade is still making a lot of money.
Obviously, the consensus trade always makes a lot of money till it drops like a brick. So be it. I don't want to be the last man standing holding it. So I don't have much to say, because if you go to have a market which has 1,500 stock stocks and you have just 50 stocks that keep going up every morning, then I think we've got a problem with the system. We don't have a market, we have a broken market. So I think, fine, a lot of people might say grapes are sour, but my point here is that, hello, let's look at another 1400 stocks that are listed on the stock exchanges. There is a problem there. Nifty is what it is because we've got 20 stocks in the 50 stocks which are keeping it where it is, and the rest 30 are just forgotten, as if Indian economy doesn't have anything more than pharma or technology. So we need to obviously understand that there's something wrong somewhere.
Sanjay, the telecom auctions are now done away with, and the telecom pack was a mighty traded one all of last week. What's your approach now towards telecom stocks?
I think I'm very positive in the medium to long term because all the problems related to the policy front and everything that had to happen on the negative side has happened in the sector. Consolidation is going to be the theme for the next few years, and the bigger players are going to get bigger. And like we've seen the world over, no market has 20 operators operating at a national level. We'll finally come down to those 4 or 5 big players. And one needs to understand that out of those 5 players today, which 2 players I need to invest in, because those 2 players are going to become very big and be part of the 5. So I think the sector holds a lot of potential because both in terms of data and a lot of other services, there's a tremendous amount of demand in the country. Fixed costs and expenditures have already been incurred by most of the operators. So I think there is a boom ahead, no doubt, but it's got to be selective in select stocks in the sector. It's not going to be that every stock in the sector is going to outperform.
Sanjay, for FY14, the finance minister has a lot of one-offs. The Sooty stake sale, disinvestment of Balco and Hindustan Zinc, the jackpot which is hit because of the spectrum auction. For FY15, irrespective of who the new FM is, managing fiscal could be a key challenge, manage these extraordinary items.
No, I don't think so. Because I don't understand that what's the, just picking up on what you said about Balco and spectrum, etc. I don't understand any reason why 30,000 crores cannot be generated by selling the ITC stake that the government holds. I've never been able to digest that. What is the logic of, government of India being invested in a tobacco company when millions of dollars are being spent on discouraging tobacco? So here's a one-off item which will get you 25-30,000 crores any day. And that takes care of nearly half of your fertilizer subsidy burden for next year probably. I think there are a lot of issues, and similarly we've got this VSNL land that's lying. So I don't think that there's doomsday as far as the deficit or resources cannot be raised. I can think of at least 5 items which can generate 1,50,000 crores for the government if the government has the resolve to do it. But we know that a lot of political and other considerations that come in when these decisions are taken. But if actually someone gets down to taking the decisions, within 1 year, 150,000 crores can be generated like this just by 4 or 5 one-off items.
Atul, the interesting point that you were earlier making, while the market has been lackluster, what's good about this, dynamics is that the rupee has been very stable. What happens in the case that if the finance minister today says that the, fiscal deficit target is lower, talks a little bit about interest rates, and we have a status quo from the RBI next, do you think there is a case for the rupee to strengthen even further and we could see 60 to the dollar kind of levels?
The rupee has been, in fact, one of the most spectacular markets. The way it has really held down in the face of, as I said, large FIs selling and a little mayhem in the emerging market currencies. There's a band of 61 to 64 for the rupee, as I see it. And if it breaks out on either side, and as if what your question was about strength in the rupee, so the base of 61, if it kind of cracks, I think that could lead to a sizable move. But the beauty or what people like is a more stable currency, which is what we are seeing, and that is I think what is keeping even the equity markets and other asset classes very stable. Just to make a point that we were really looking at the VIX, the currency VIX, it's almost at a 5-year low. So you really have a very stable currency, and I think that has been one very, very big positive in spite of the sell-off that is happening by FIs in the equity space. So for me, 61 to 64 would be a level. A breakout on either side, I think could lead to a dynamic move in the currency. But yes, definitely one of the most well-managed spaces that we have seen in the last 3 to 6 months.
Sanjay, how imperative is it that the RBI does maintain a status quo, if not a cut, for the next big market move, at least in the near term, in the run-up to the elections?
I think RBI has correctly stated its goal very clearly, and then we talk about the Urjit Patel committee and talk about inflation, because RBI is absolutely clear till it's not able to get inflation under control, until it doesn't see inflation not being a risk to the economy, RBI is not going to let go of easing, or not going to let ease off interest rates aggressively. And I correctly agree so, because the government has to now deliver its side of the bargain, because RBI can't do much more in terms of being able to control inflation. So that's in a way a pressure that RBI is putting on the government to handle other issues that would lead to controlling inflation. It's like what was correctly announced by Rahul Gandhi a few months back was that the abolition of the Agricultural Produce Marketing Act across Congress states. Those kind of things, the supply side issues, those need to be sorted out. If you look now, no one in the media is talking about onion prices, which were a cause of concern 4 months back. In fact, there are no buyers for onions at the prices in the wholesale markets right now. So, these kind of abnormalities that we experience, we need to correct them, because these are the ones which are causing and creating havoc with inflation and a lot of other issues. So I think till these are not sorted out, RBI is not going to let go, and I correctly agree with them that the government has to deliver on supply side, fiscal issues, a lot of other issues to sort out inflationary pressures. Till that is not done, RBI will not let go of the easing, not let go of the interest rates.
Mm-hmm. Aditya, just want to get you in. The vote on account may be a non-event, but there are big events coming up in 2014 which could impact the market trajectory. What is it that you would advise investors? How should one position themselves from now up until, May, when the elections are ready to take place?
See, in many senses, our Sensex target for the year end is 21,800, which is effectively a return of about 7 to 8%. So in some senses, we don't have a big gain or a big downside kind of a view. Our sense is that's the kind of return you should play for through the year. To push them up a little bit, I think it's a market where you need to trade a bit, because it's likely to move up and down a little bit, the market. It's likely to be a little volatile. So you've got to actually buy at slight lows, and if there is momentum in the market, then actually trim positions.
Dr. Reddy is up by 28 rupees, Infosys 25, HCL Tech has added another 18 rupees. Now this is already on back of the kind of run up HCL Tech has seen last year and this year, and Bajaj Auto also seems to be making a meaningful comeback. Where are the jewelry stocks? And that is one sector where in general markets are expecting that the custom duty on gold or the import duty on gold will go down. So we look at
which Titan is actually holding up very smartly. Volumes as well have been pretty decent. 234 is where the stock is. You've got PC Jewelers, Tara Jewels, Gitanjali Gems. All these names are holding out quite smartly in trade as we speak.
Atul, do you think has Titan bottomed out?
Can't comment on Titan because of a huge vested interest.
Personal view. I'm not asking your firm's view.
No, irrespective, I mean, I'll just the thought of betting on certain expected events on budget days. At least my experience and many budgets in the market have taught me that it's kind of a very, it's a very difficult trade to really play out, even after announcements are made in budgets, if there's something important, sizable, there is money to be made even after that. So really going out and betting on anything based on certain expectations, some, the textile and blah, 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 you get really chopped around, and it leads to a lot of activity and a lot of swinging around. So from the trading point of view, it becomes very difficult, I think, and I've rarely seen big money made. Again, it may be a little delayed that the policy happens, but it's going to be more important is how you interpret and play up with that policy, because if the move has to be big, it's only then that you will make money. But just playing on volatility around around expected budget announcement is, experience has taught me, a very dangerous or not such a profitable strategy.
Fair point, Atul. So we'll give today's call a skip. Let's talk about more like a medium-term call. What do you think is the core direction for this market, Atul? What is the bias of your book? And do you think before election, Nifty could go to 6,300 or 6,400?
I think so. I think, in fact, those targets are even conservative, Nikunj. As I had earlier said, that this year's performance has been not about the index. If you've traded the index, you've lost money. Simply because you've hardly had any few trends. You've just got whipsawed all around the year. But the bias is that if you were in the right sectors, simply in IT or pharma, again, even if this was said a year ago, these would have looked expensive. But again, it's something that I feel that, what performs, whatever is expensive starts looking cheap. And if you were positioned in these sectors, you've had 30, 40, 50% return in stocks in that space. And I'm talking about frontline. It's not about the hidden gems or, most people talk about some end-to-end results. No, as I just said, HCL Tech 118%, Lupin, Sun Pharma 50%. Even outside the sector, whether you were in a Bharat Forge, you were in a Arvind, you were in a Voltas, you made a lot of return. So Nikunj, I think going ahead, playing the index is not going to make you a lot of money. But if you're able to see stocks that in a very difficult economic environment are doing well, you will really feel good outsized return. The year going ahead is going to be about not just at a market level, even globally. If economies, whether you're in the emerging market space or wherever you are, whether you're not in a favorite space, but if you are holding out and doing the right things, you will get rewarded, because money is going to be scarce and money is going to only reward performance rather than just an allocation play and everyone who happens to be in that space gets money. It's not going to happen there. And I feel that India is very well poised. Post-August, the way we have behaved on the charts, the way the market has performed, I think that the market is telling you that we are among the stronger plays. If things go right, or if we don't like shoot ourselves in the feet, we would be one of the earlier markets to break out and be performers. Country specific, sector specific, stock specific. It's going to be performance that is going to be rewarded. If you are an underperformer, you could be like a real estate sector that's down 40% for the year.
Atul, always good chatting with you, and really appreciate you taking the time out and speaking with us today. And Sanjay, I want to come to you for the underperformers. For someone who's been in banks and, God forbid, PSUs has really got thrashed out, what's the right approach to financials right now?
In fact, before I answer that question, I need to send $10 million to the gentleman who was just talking about all the winners he'd had and all the stocks he said.
That would be Atul Suri. Perhaps you'll have to increase your quantum.
Offline, I'll take the number and details down so that I can, give him $10–20 million in PMS, because.
Sanjay, in this kind of a market, when you said that you're not making money, you got $10 million to gift to someone. How much money are you making, my friend?
No, it's not my $10 million I don't give up, but so many clients would be happy to give. I wish I had $10 million. I don't even have $10,000 at this point of time. Anyways, talking about, Aisha asked a question about the banks. Yes, absolutely. Anyone who's in banks and one of them happens to be me is completely pasted at this point of time. And that's the reason why I was asking the, details of the person who's managing the money so smartly. So, definitely there is a problem that's been there with the banks and more so in the public sector banks. But in my opinion, the downside in the banks have been overdone at this point of time. Just like I feel that over ownership in a lot of other sectors, just like, I don't want to really say that, I told you so, but just like 2 months back, Ranbaxy was everyone's darling. Right now, technology and a lot of pharmaceutical companies, is everyone wants to be in. So, nothing, what is that old saying that nothing beats success, or nothing is like success. If you're successful, a lot of people crowd around you. But I think it's a good time to start looking at banks. I've been saying that for a few months. I've been wrong, no doubt. But I think it will pay off, because we can't have such large institutions just, winding up or shutting down. We can't have banking licenses being given in the next 2 to 3 months, as is being talked about. and those banks, those licenses being worth XYZ, as soon as you hear that a particular NBFC is getting a bank license, we have the stock going up 5-10%, whether it's L&T Finance or whether it's Interim Finance or it's Reliance Capital or whatever that may be. But at the same time, it's State Bank of India, we beat it down by 10%. Yes, NPA problems are there, but going ahead 2 to 3 years, I think you'll see massive outperformance from the current levels.
Okay, Sanjay, we'll let you go on that note, and be sure to pass on that list of money-making ideas to us too.
I don't have any, but you know, the gentleman before me had lots of them, so I'm going to pass on my money to him more than the ideas.
Okay, Sanjay, good chatting with you as always. Thanks. Okay, Aditya, I just want to get you in on the conversation as well. Do you expect growth to pick up in FY15? Is India Inc. now in a better position?
For the current year, we are forecasting about 8% growth for the Sensex. We expect it to pick up to about 15%. But that's just a change in level. In terms of whether there's been a change in our expectations per se over the last couple of months, in that case, the answer is no. The numbers are more or less the same.
So Aditya, in your book, what are the big challenges, the big risk for India?
I think, as I said, specifically from the economy perspective, there is a leveling out that has kind of taken place. So I don't think there's any material risk on the economy per se. I think the risks that lie are more top-down. So one could be on the external front, whether it is tapering or some unsettling that happens in global markets, or it would be in terms of an electoral result that is inconvenient for the markets or not so good for the economy per se.
So which sectors would you prefer at this juncture and which ones would you avoid?
Our preferred sectors are actually the IT space, the pharmaceutical space and telecom. And the one sector where we are, or the one major sector where we are cautious or underweight, is the consumer staples space.
Right, Aditya. Appreciate your time and thank you for joining us. Let me just mark the market action and market activity. 20 minutes into trade, Nifty is trading above 6,050, 6070 to be precise. Market breadth not that bad, and if I just scan through the gainers and the losers scorecard, nothing has changed. Dr. Reddy up 37, which is a pharma company. HCL Tech up 18 rupees, which has been a marked outperformer. Axis Bank is bouncing back. HDFC Limited is looking okay, but it's 800 rupee stock, it's up by only 7 rupees. If I look at the movement in IT and pharma, the leadership still is associated with those two groups. Ashwini, HCL Tech, we discuss this stock on a daily basis, but it's fascinating to see the way HCL Tech, which is a large cap Nifty 50 company, is moving from strength to strength.
Well, that is the reason you should never say this is overdone and that is underdone, because what moves up continues to move up relentlessly in spite of valuation, in spite of skeptics, etc. So chances are that techs will continue to do well, and even today the best performing index is the tech index. So whatever vote on account, election, etc., if something will keep you safe, that is the tech and the pharma stocks, pharma selectively, not all of them, and that is where you have to be cautious. Dr. Reddy is one of the better pharma stocks. In terms of individual stocks, HCL Technologies is a buy with a stop of 1500, target of 1550. Bharat Forge has corrected for 2-3 days, so that's a buy with a stop of 350, target of 375. Zensar Tech is a buy with a stop of 380, target of 405. At the same time, SBI is a sell with a stop of 1490, target of 1430. And JSW Steel is a sell with a stop of 845, target of 800.
Okay, let's slip into a break with news that the Nifty is just about mildly in the green, picking up somewhat. 60-70 is where we're at. When we come back, we'll chat with two very special gentlemen, Yashwant Sinha, BJP leader and former finance minister, and Anant Narayan from Standard Chartered Bank.